Hey, what's going on, everyone? This is Tyler Coates with Alpha Analysis, and we are here for the third daily live stream since getting started on Monday, and definitely a good day to get into some charts as we've got Bitcoin breaking through $50,000. And that was the question yesterday. My conclusion was that target was 59.5 based on the flagging pattern that we're seeing, and that's still looking good, but definitely seeing some reasons to be very careful. That's for darn sure with what we're seeing out of the premium in the future on BitMEX. Just got over 10%. First time I've seen that since the real very long time. So that's a very big deal, and this is the FOMO phase as far as I'm concerned. And that the question then just becomes how much money do the FOMO buyers have left? Because there's been a lot of opportunities to kind of FOMO buy up until now, and if there are going to be a lot of people buying these big moves, then the amount of ammo that they have left is basically going to define how far this can go. When you enter a stage, it's like, think of capitulation. When you enter capitulation, I mean, anything can happen in the blink of an eye. There's no telling how far down that could go before eventually finding some sort of bottom. And this would be kind of the equal and opposite. The FOMO phase is the area where we just kind of have to wait and see how many shorts are left behind, kind of trapped and needing to buy back, and then how many FOMO buyers we have left in the market. So let's go ahead and get out of that. And get some quick shout outs. I see Mr. Fibbo Swanee in the chat. Always good to see you as usual, and was going to make sure to share that recent video that you had on TradingView. So let me make sure to get that pulled up. That was a short and sweet, like 3-minute video. I saw some people asking for his analysis, so I want to get this pulled up to make sure that we've got that for you. Yep, there we go. Okie dokie. So I will share Fibbo's chart here in a moment, and good to see everybody else as usual. Rashad Kazi, Robbie, Jump Kick, Kimozabi, Fiat Twat, Burek. Good to see you guys. So I think it is probably about time to have myself a sip during this nice evening here up high in the Rocky Mountains, and then we will go ahead and get into the charts up here near the moon, if you ask me. All right. So maybe the camera quality isn't the best. Hopefully the screen share will be. Maybe it's the stream key. I'll do my best to continue to improve the quality if it's not there, especially on my whole setup to do this from the laptop. And if that is still not going to work, then that'll help to troubleshoot for sure. So hopefully the charts are going to look okay on the screen share, and I have increased the font for my Word document so that makes that a little bit easier to see. All right, go ahead and share the screen here. So let's start out with Fibbo Swanee's video here. Title is 53, then maybe a move to 36, then maybe to 85. Interesting. He lines out very short video why he thinks that could happen based on prior price action. So let me see if I can get Here's a link in the live stream. If you guys look at the live chat, there is a link there. And let me go ahead and edit this. Do right here at the top. Swati video. All right, there you have that. All right, getting a warning on the bit rate. That's nice. Okie dokie. Let's see here. And then next thing before diving into the charts, what's going on in my life today is some sweet socks. So if you guys are the type who like really cool socks, like Bitcoin blasting off into the moon, when you wake up and see it over, 50K, and you want to show have a little bit of flair, as they would say in office space, come on over to Mount Socks. Here's an affiliate link here. Also one in the description of the YouTube show right here. Affiliates, Mount Socks. I mean, to the name, I just knew I had to at least buy something from them. I mean, what a great name. So Mount Socks here, you get proof of sock and some cool new designs coming up regularly. I might have to get myself some new pairs here. So shout out to Mount Socks. Okay, let's go ahead. Try to get a fresh chart up. There we go. Start out by taking a look at some targets, then go ahead and get into the process. There's definitely a handful of targets we can be looking at. So let's just start with the most conservative. Would be saying that instead of it being like a flagging pattern, it's more of a ascending triangle, and that would give a smaller move when we got a lot of momentum. I always want to be conservative with the targets and where I'm looking, but when we get a lot of momentum, that's where I look to be, looking at. Oh, we did get there. Look at that, just on the wick. Maybe a little bit more of an aggressive target. So here we just measured from this high down to here, and then connected that. I would have done it to the breakout point here, and we see that price, if we just kind of draw a horizontal from that, that's right around that 52.5 right up here where we wicked up. So that's first target reached, and that would definitely be the most conservative target. I need support here. My hands get tired and achy after being on a computer all day every day. So let's see what we got here. Copper compression glove. That comes right in handy. And then I don't know what this one is. It's old. It's worn off, but I got Walgreens, another kind of compression type of deal. Really helps. Okay. So now here would be the next move where I got my original target from. 58.5. I think I've been saying 59.5, 58.5 sometimes. Yeah, 58. Make sure that's right. Yeah. We're going to say 58.75. 58.75. Well, I sure screwed up. I'm already gonna have to go get another beer. It was late and rushing. So what are we gonna do? I'll be right back. All right, got two just in case. Oh, geez, I did not want that. I'll tell you what. Start rushing, you start making mistakes. One of the best piece of advice I ever got is when the market moves fast, move slow. Excellent advice, and like really focus on it consciously, just like moving slower than you can even make it. You know, as slow as you can possibly move. Sometimes when you find it really, really difficult to move slow, move ridiculously slow. And if that doesn't work, going for a walk helps sometimes. But when the market moves fast and you start, you know, moving and thinking too fast yourself, that's exactly how a lot of mistakes are made. Like grabbing this stupid thing instead of a Coors Light. Okie dokie. So we've got our bull flag target here. Fibbo's target is 53. So that's basically right here where we're coming up to pretty quickly. If he would like to stay on the stream, we might be there before I'm done talking. Seems like that could be the case here. And then a target that I'm really interested in, I'm going to need to pull up a chart here. 1 second. Is going to be, it's going to take a minute to explain, so let me just make sure I got it. Okay, let's see here. All right, I got it. Yep. So the next target that I will talk about is one that's kind of that is new for me to be using, but it makes so much sense mathematically that I already have a good degree of confidence in it. And it will be actually derived from the backtester. So good news for anybody who has been excitedly waiting for the backtester. I met with Johan this afternoon, and I have been going through a bunch of calculations manually to make sure that everything's working, and it seems like it is finally ready. We both agreed that it looks ready to go, at least release it on a beta version with a bug bounty is what we're going to be doing. So that is very, very exciting. And one of the metrics that I wanted to be sure to track is the what we're calling the high watermark. So it would be, for example, if you get a long signal on emasar. So let's go ahead and pull up emasar here. Put it into investor mode and say display signals. All right, I already got it. So here's the idea real quickly, is that say you get a long, what is the most ROI that any long has ever seen? So for example, not after the reversal. So if you get a long, let's just go back. Just go back to 2017 here. So when you get the long right here, you would be waiting for the close long, and then that's what would be determined, like that your ROI is based on this signal at 29.57 and then close long at 10.51 for a big, win on the trade. But what I wanted to see is what is the most it's any position has been up at any point. So right here we see, let's just do a quick calculation. We've got 10.541 divided by 2957. So this signal resulted in a 356% ROI based on where the open long occurred and the close long. But at this point, if we go 29.57, like right there, when it was up here, it was at like a 568% ROI. So let me get it on the same chart here I'm looking at. So that's what I would consider the high watermark is. Still get used to this new setup. Is going to be the most profitable that a signal has ever gotten to. If you were to sell the exact top wick, that would be the high watermark. Just looking back historically on every signal that we've ever gotten, what has been the most profitable that any signal has ever gotten to at any point using the highest price. So this is kind of what I'm thinking, just as I really trust in math more than anything else. I am looking at and I'm a gambler who is looking to bet on the odds, right? So if a signal gets to the point where it is reaching like the most profit that we've ever seen from any signal in emasar, so it's reaching the high watermark, well, instead of waiting for that close long, I want to maybe start taking aggressive profits, much more so than normal, because for sure, maybe this is going to be the new high water mark, and maybe it goes much, much further than I would expect. But mathematically, it just really makes sense that if any signal does approach the high water mark and get into that territory of it being at this point, the most unrealized profit that we have ever seen for a signal on this system, that's where I'm, just thinking like a gambler who wants to bet on the odds. So let's see here. Right now, we are approaching the biggest profit that we've ever seen in an open long signal. So we are approaching the high water mark, which is 541%. So it was that signal we were just looking at. 541% is the most we've seen price appreciate after a long signal before getting a reversal. So that is on the very, very front of my mind right now, 96.43. And the new indicator is actually going to have a line that draws this for you just automatically so you can kind of see it. And we go up 541. So we've never before with emasar, just historically on any of the signals seen it get above 540% on the 4-hour chart on one signal before, at least giving some sort of correction that causes for the emasar reversal. So for example, like right in here, notice how we did get the emasar reversal, but it continued. I mean, that was down at 3,000 before it continued into another big move. So this was from 1143 all the way to here where you got that reversal. So that's kind of, even if we are to really, continue into six figures this year, which I do think so, I am expecting some sort of action like this to reverse emasar, or at least get it into a no trade zone. So let's just go back to the chart here. See what price that is at. So hopefully that makes sense to you guys. I'm going to be putting together a video. What happened here? That explains it all. So that will, my plan is, my goal is to get that done tonight and get everything published by tomorrow. So keep an eye out for that. And in the meantime, this would be the high watermark target from emasar. Let's do a watery color. Okay. I want to do a yellow color for the bull flag target. And smaller. Okie dokie. So high watermark on emasar 4 hour. So right now the unrealized profit on this signal is at 431%, with the high watermark being at 541. So we're, at the point where this is one of the most profitable signals we've ever seen, and therefore, definitely not the time that I want to be greedy. Instead I want to be looking to do the opposite. Okay, so what is that? 62.4. It'll be hard to see. Let's just do that right. Okie dokie. So there are the two targets that I am, I'm going to be really darn interested in taking as much profit as I can if we get up into this area between 58 and 62. And it, as far as I'm concerned, it sure looks like it wants to keep moving that way. We can kind of draw on a trend line here that this has been trending off of to give ourselves some time targets. And that would be looking, well, I guess you'd want to look at the resistance for the time of the top. So here, I mean, this is suggesting potentially 59 by the next 2 days, by the 19th. Could make sense. Or potentially 62 by the 24th. And that's where I would give myself sort of a range, March 15th, as long as we're still in this channel, I would still be, looking up in that area. Could it go much higher? Of course. Could it never get there? Of course. But these are the targets I'm looking at personally. 58.775 to 62.4. And then something else I would just be looking to do is kind of draw in this resistance. If it does smash right through here, I'd be looking at this resistance trend line here. Maybe something. It's not going to work. Okay, work it all. So that would be definitely where I think we're gonna be able to get there based on the momentum that we're seeing. Let's go ahead and pull up the oscillator. The EXA. So we are starting to get into overbought territory on the 4 hour, but this is really where big moves can happen. Like right in here, you start getting up here and it just keeps moving. So I'm certainly seeing that as being some sort of possibility. This daily just recrossing is a very big deal as far as I'm concerned. That tells me that we're still, maybe have some weeks to go in this move. That's very important to me. And the weekly is recrossed as well. That's, beginning of a move type of stuff opposed to end of a move type of stuff. Another target that I would be looking at is a 2 extension off of this move here. And That is 65,357. Oh, that's okay. Let's see. That's what I'll be looking at there myself. Put extension up to 65,323 off of this move here. Okie dokie. Take a look at the chat, see if we have any questions. Trade the trend, absolutely. Wise advice. What I do my best to do always. And if you've been in this trend, you're probably in some deep profit, and I would definitely not be looking to, short this trend, but I would be, very much looking to take some profit when a market moves. I mean, shoot, what does this thing move? Let's just look. So we're coming up on a year now since the capitulation bottom. And we're up like, what, 1,200% in a year. So, I mean, yeah, this trend started for me down in here, I guess over in here. And therefore, one of the hardest things is not to take too much profit too soon. But then again, once you start really getting into some deep numbers, that's just paper profit. That's when I look for the math to see where I should really expect this thing to revert. Let's take a look at this extension from the 50 EMA. That is serious. What would that be? Distance from moving average. 50. So absolutely, anybody that's been shorting this must not like money, but at a certain point, I mean, geez Louise, that's just the hardest balance in the world, to try to find, where to really hold strong and where to really be very aggressive with taking profit. When I'm trimming, taking 10-15%, that's just, not aggressive at all. When I'm really looking to be aggressive, I'm like looking to take like 80%. And this is some serious stuff. Let's see if we can put this into percentage. So yeah, I mean, price getting this far extended from the 50 EMA on the weekly, that's a very big deal to me, especially what we're seeing from the funding rates and whatnot. So I'm going to be taking profit in this sort of environment, and then it keeps going and excellent. So look to still have a little bit. Saw 2021 top for BTC. Took a look at that at the first show. It was actually the very first stream on this channel. Was I don't remember the date. Let's just go ahead and check it out. About a year ago, looking for about 150K by December of this year, and that's still looking pretty good. I love my facial expressions in some of these, like, what is going on here? They're how upset I am there. All right, let's go ahead and get into the process. Hopefully that is visible for everybody. I've been really focusing on getting this back tester together, so I still haven't been able to put together a video for the moving averages or this oscillator, but that will be right around the corner. Hoping to get all that done this week. So CMA, that's Coates moving average. All you need is 2 simple moving averages, set the length to 2, source high, here, source low. So you have a 2 high and a 2 low, and then a least square mean set at 9. Excuse me. And I got front run again. Okie dokie. So support is going to be 2 low to 9 LSM, least square mean. $41,953. $6. Resistance is going to be, we're above it right now, in a 2 high, 51,170. Stop is going to be 2 weeks before the current candle, that low, 32,333. $42.6. Oh, that was supposed to be the daily. I screwed that up. My apologies. I was looking at the weekly. So I was a little confused there. Okie dokie. So what I'm going to do here is a little cut and paste action. You guys know about the copy and paste, but we know about the cut and paste. All right. Support, same thing. 55.48. Resistance is 52,595. So I would be selling here if I got filled on my last trim. My last trim that I got filled on would have been, that was this candle here, somewhere in here. And the re-entry just missed. Oh yeah, I would have been looking to re-enter right in here, and it just missed. So being that that's the case, when the market really starts moving, what will happen is that it'll fill all your trims, but it will not come back to give you any re-entries. That's generally when the market starts taking off and leaving people behind, and that's when only FOMO buying really happens. So that's when I will just say, hey, look, I had my trim, and it was one of that 10% variety, and if I was able to re-enter, I keep doing the same thing. Like sometimes you just get some nice opportunities to keep selling, re-entering, and then almost as a rule, before a breakout really happens, it should leave behind a bunch of people. And so, like if I get filled here and then we have this, it makes me more worried of a fake out. Whereas when it fails to fill people and kind of just runs into a wall of support and then leaves a bunch of people behind, that's kind of a good recipe to continue moving forward. So that's something I really grow to expect after consolidation before breakout. And I was even talking on the last couple of shows, just visualize in your mind, what does a good trade look like for you? And a good trade for me will always have a sell before the breakout, a trim, because I'm always betting against the breakout, because markets tend to range 75 to 80% of the time. So therefore, we should be betting against that happening most of the time, and at a bare minimum, leaving ourselves 20% on the table for that 20% of the time or so when that actually does occur. So when this happens, it makes me feel like we're ready, for a nice move. But now I am not needing to trim until I get my re-entry filled. So now that my re-entry didn't get filled here nor here, I can just keep trailing it. And then if that does get filled, now I'll be back in a position to trim again. So let's see here. That'd definitely be a spot if you want to buy there. That support. Stop would be 1 hour emasar. Call it 42,444. Here's what I'm looking at for ETH. Or no, that's Litecoin. I think 202 is a good spot to buy that if it gets there. $47,800. 52.5. 43,650. Critical level for trend continuation. 43,650. $48,888. 53,458. Up. 36,250 and 33. Critical level for a longer term trend continuation, but then again, that's kind of what I was pointing out to earlier, where just breaking that and resetting it would be enough for me to really be thinking it's ready to continue. But that's where I would just have to wait and see what signals occur. Okie dokie. So let me check the risk slider. Buy signal above 1. Very bullish. This is Fisher transform formula applied to the distance from the moving average. Let's go ahead and take a look at what we're seeing here. Okay, June 25th future on BitMEX trading at 57,000. $2,385 is the spot. It's at 8.81% premium. That's actually coming down. It's very interesting. That is very interesting. I guess the arbitrageurs are stepping in. Okay, we've got 0.195% funding in 3 hours and 1531. Percent future. So that would be absolute min risk based on us being in a FOMO environment. So let's go ahead and go over to alpha analysis here. and check out what we see there. Yep, showing full on FOMO. And as we see here, back to zoom in. This is available for free at alphanalysis.io/FOMO-finder. And it colors the candles based on the environment that we're seeing, which is going to be derived from the premium in the futures and the funding rate, spot price relative to margin contracts. And we enter FOMO here and then kind of consolidated. So seeing something else like that could make sense. Seeing a very a bit of a prolonged, like sort of V top is really what I'm expecting. Let's go back to this guy here. So this is what was interesting on this top that occurred in January 2018. A little bit more. It entered FOMO even before we took out the high. So it was like FOMO dip buying. That's a big deal to me when you enter FOMO during a dip buying opportunity. You should not be seeing FOMO during a dip buying opportunity. Let's go back to 2017 if we can here. Yep. There we go. Oh, I was looking at 2017 events. I was looking at the 2018. 2019, I didn't say. I thought I was looking at. That one only had one candle of FOMO. And then no FOMO dip buying. Whereas back in here, what do we see? I think these are 8-hour candles because funding rate's based on 8 hours. 1, 2, 3, 4, 5, 6, 7, 8. Beautiful. So 8 times 8, 64. About 2.5 days. So that's the type of FOMO that I would expect when it lasts for a couple days. That's when people just really lose their minds. It's amazing. I pay very, very close attention to the relationship of what happens over like the last 3 days. When you consolidate for like 3 days in a strong bull market, people start really losing interest. If you really just see nothing but FOMO buying for 3 days, people just start to forget that it should ever come back down to earth. So it'll be interesting to see here. Full on FOMO buying, and I am very much looking for some sort of equal and opposite reaction to what we saw back on the capitulation, where backwardation just got insane, like record levels, meaning that the futures were way cheaper than the spots. The funding rates were just stupid. The volatility was just insane. It was moving like in 5 minutes, we'd see 20% moves to where you could see the price at 5,000. By the time you click market sell, it's down at 4,000 again. That type of stuff is kind of, really what I'm looking for here, for a really, major sort of, or just like a medium term, blow off top sort of situation, not a major, medium. December is where I'm looking for the final top to be. But I'm definitely looking for some sort of equal and opposite reaction to this, because I remember very vividly watching this action and seeing what I was seeing in the order book and just how quickly the price was moving and just how haywire everything was, with how just insanely oversold it was at record levels. That is what I'm looking for here. And even though we are definitely FOMOing, we're not quite to these record levels, where if we do reach those targets that I'm kind of looking at, was looking at earlier. I don't know where they went, but that 58 to 62 level, you know, a quick sharp move up there, and then some of that stuff happening. I'm going to be sitting up in my seat. I'll tell you that much, regardless of what happens. Okay. Check point exposure. Get the handy dandy calculator out. %. I think that went down a little bit because some of the maybe a little bit heavier exposed in the alts than prior. It wasn't because I sold any, it's just because of that volatility with the Litecoin and Ethereum that I own. Estimated risk, what are our stops? 32,333. 34, we'll say. We'll go with 34. And 42,444. Still check that. At 34. Gonna do lucky number 4444 and 42,444. So I'm going to average that out. 42,444. 4 equals divided by 2. Average is 38,444. 5 equal amounts set for a stop here and here, then I can assume the average risk would be here based on no slippage. That's why it's always estimated. And we are right now fully hedged. I've been explaining why over the last few weeks. I'm taking profit to fully recoup the initial investment so that I left the profit on the table in Bitcoin, but recoup my full initial profit. And now that's why it is a fully hedged position. And I can be looking to risk 2% on a re-entry. So let's see here. We'll be looking at, that is my entry zone. Make sure that all looks right. And this is when I want to get it filled in the first couple hours it's open. You want it to happen early in the day. If it happens within a few hours to go the open, you're probably going to close down here. You know, if you come down here early, maybe you get some nice wick. So I definitely want to get these orders set after that close. 55.48 and 51.176. Cool. So my stop is going to be just this one. I didn't need the average stop here. So it's going to be, let's average up the entries. 2548 plus 51,176 divided by 2. Average entry would be, if both get filled, 5862. So now we can use that to estimate the risk. 5862 minus 42444 divided by 5862. 16.55% estimated risk. So if I wanted to risk 2% of my bankroll, I would do 2 divided by 0.1655 gives 12. Or 12%. So target risk is 2% of account, which implies exposing 12%. Okay, so I can enter orders here for 12% of my account. We'll go 6%, 6%, and then if it gets stopped out, I'll lose 2%, which is the low end of the risk spectrum. We see here min risk 2%, max risk 10%, based on the risk management tutorial that we have over at alphanalysis. Come on over to the forums. It's all free. You'd only need to sign up if you wanted to comment, but we encourage you to do so. Right here, trade tool belt. And that's the video where I get into how I determine risk myself. Okie dokie, so let me see what I need to do here. Okie dokie, and then divided by the price will tell me the exposure. All right. Nope. Let's go ahead and put in the orders. Let's see here. D1. We're going 7-7. Sevens are lucky. 51-1-7-7. I'm going to buy that. So I need to log in again. Anybody know the original name for Coors Light? The original name that it had? I can't believe they changed the name because it was the coolest name ever. Okay. 5-1-1. Take one. 5-1-1-7-7. Buy that. We can. And 55-4-8. And buy that too if we can. Set that stop loss. 4. Let's see here. I think I want to a little closer. Do we have another option? Let's take another. Hmm. 42. Get that up to 42,555. All right. I had some orders to buy down at 40 to 42. Those are now canceled. Only valid for about a day there. Now we have adjusted. Basically what we're looking at is this 2 low MA and this 9 LSM on the daily. LSM being least square mean, go into indicators, least square moving average, least squares moving average, and then just I do 9 high low 2. So it's really targeting the highs and the lows and amplifying that. So we have closed above the 9 LSM and the 2 high, which is telling me that this is where I want to buy. The 2 low and the 9 LSM from 55 to about 51,182. And I'm wondering about a tighter stop. Yeah, I was thinking that made sense. I can definitely use this low right here. Same thing as the weekly, where we look at a couple candles back and then setting it at that low. And I like this one because that was a trap. That was a bit of a shakeout. That's a price that should hold as long as this trend is intact. So I'm really going to have 2 stops here, 45.7. I'm going to go just a little bit, 45.555 and 42.555. I like that. So I could increase the exposure now that I'm using a little bit of a tighter stop, but I'm not going to do that. Now that I'm using a tighter stop, it's implying less risk. So now I'm not even risking 2%. It'll be closer to like 1.5, maybe 1.7. But I'm just at that stage where I'm really wanting to be very, very careful with the buys and much more attuned to the profit taking. That's something that's really important, is that you're always in one mind state or another. Let me have a drink of this guy here. I forgot about that. That's why I only brought 1 beer with me. You're only ever going to really be thinking about one thing. So ask yourself now, what are you thinking about? Are you thinking about, man, I wish I had more exposure. How am I going to get more exposure to this market that is just going to the freaking moon? And I took too much profit too soon, or I didn't take, always the good signals. You'll always think, man, I should have entered more. I should enter more on the good signals, and you always should have entered less on the bad signals, right? So if you're in that mind state of like, man, I didn't enter as much as I wish I would have, and how am I going to get more? Where's this next dip coming? When can I buy? When can I buy? When can I buy? When you're in that mindset, there's no part of you that's thinking about taking profit. You're only thinking about how do I get into this market that just left me behind. And therefore, it's just not even on a radar to be looking to sell. So what I really noticed about myself is that I need to be very aware of kind of what, just psyche I am in when I am trading. If I am, more times than I'll ever be able to count how many times I've been, left behind or made bad decisions and sold too soon or anything along these lines. And I very much know how that feels. And I think that one of the most important aspects of not even trading, but just actively watching charts and investing is knowing that there's always going to be another train. There's always going to be another train. And those that are right now really just focusing on taking profit, holy crap, look how much money I'm up, or look at how extended we are from the means, look at these funding rates, look at the premium in the futures. Those that are really focused on taking profit, I think are going to be the ones that are in the right spot a month from now. Because you can't be thinking about how am I going to maximize my exposure and how am I going to get out right here right now. So I think that there's no telling how far this could go, and how much. There's just no limit. The fundamentals of this thing it is very, very underpriced. And I've been saying that all along, that the stocks flow model shows about a $70,000 Bitcoin on this after this last halving, and the recent runs have always overrun that on the way up and then always overrun it on the way down. So I am very much expecting over 70 and up and to 100, 150 plus. And I am going to want to make sure that I don't get over aggressive with taking profit when I'm really looking at these big numbers. That's how, again, how a lot of people get left on the sidelines, is being like, holy shit, I am up so much money. I'm just taking this. I remember last time I didn't take this at all. I'm taking this time. And then you take it and then boom, it's gone. And you're just like, now, so now you have that group on the sidelines. So for me, what always works best is scaling in and scaling out, and having rules for the maximum that I can trim when the trend is still intact is 80% of the position, such that if this thing just really, goes so hard in my favor that I want to take max profit and then it just keeps going, well, I just keep having some exposure to the market, and that alleviates any, anxiety from being on the sidelines. When I'm completely on the sidelines, I do not trade anywhere near the same as when I do when I have some exposure to the underlying trend. And that's why the most important thing is to start with establishing exposure to the underlying trend. And if you're going to be trading, start by taking profit. Start by taking profit. And if you think like this is a really a good, spot to sell due to these funding rates or premium in the futures or whatever the case may be, take a little of the position that you established and sell it for spot. And now you're in cash. Like, what's the risk? It's a way to hedge your position, where the only thing you risk is opportunity cost. And if you're always going to be worried about risking the opportunity, you're never going to be taking any profit along the way. So that's something that I think is very important, is to ask yourself, what is the risk of taking profit from spot into cash? Even if you don't have anything you want to buy, what is the risk? Is the risk, that you'll never be able to buy that back? Well, so be it. I mean, can't you always buy back higher if we get a tremendous opportunity? And of course, I'm not suggesting to do anything at any time. I'm just asking you to think for yourself. What's worked for you in the past, what hasn't. And just for me, what's worked is when the market is moving up like this, I like selling in pieces on the way up. And when the market's moving down in an overall bull trend, I like buying in pieces on the way down. That's what works for me. But it only works when I've got a good amount of underlying exposure to the market, such that when we get a big move, like if this moves to 58 to 62 and I'm taking max profit, as long as I'm not completely on the sidelines, I'm not going to have those feelings of FOMO that I know I would otherwise. So I think it's very important that no matter how sometimes convinced you may be that this is the time to take profit, think about leaving some on the table and or taking your profit in Bitcoin. That's what I look to do myself in the bull trends, is buy in with USD. And if I buy in at 10,000, for $10,000, I buy one Bitcoin and the price goes to 20, I can sell half of that, recoup my $10,000, and then I still have $10,000 of exposure to the market. Sure, I only have half a Bitcoin, but now I have half a Bitcoin. It's worth 10,000 plus $10,000 in USD. What's the risk? I mean, if it keeps going up, sure, I miss out on some opportunity, but if it goes down from there, it could go straight to zero, and I'm fully hedged to the point where I wouldn't be risking anything other than unrealized profit. So these are the things that work for me. You know, a lot of it just kind of based on game theory. I would strongly recommend anybody to look into Nash equilibrium game theory. You know, start just thinking about this stuff for yourself is what I think is most important. Just thinking about being realistic and objective about what's worked for you in the past, what isn't working, you know, what can be improved, what do you just need to tough out. These are the things that I think are very important to think about. And I think game theory can go a long way. I think it's very underutilized in trading. And, you know, just a simple idea that I'll talk about time and time again is that if markets range 75% of the time and they trend 25% of the time, well, then as you get to that local high range resistance, trimming 75% is about game theory optimal. Now you've got 25% of the exposure for the 25% of the time it takes off, and then the rest of the time, you know, you're positioned properly. So that's, I think, just, you know, some ideas to be thinking about and looking into. I'll take myself another look at the chat before signing off and calling it a day. I guess maybe we can take a quick look at Litecoin, because I do think that that's in an interesting spot, and I did already mumble something under my breath. Spread's still very reasonable. This isn't that thing that I'm looking for. I'm looking for you know, big premium in the futures, big premium in you know, big funding, and you know, I want to see this market get away from the market makers to where you've got, you know, Coinbase trading at 55, and then you've got Kraken trading at 53, just because there's just so much mania going on. That's the type of thing that I'm really trying to keep my ear to the ground for. Okay. So yeah, I like, yes, this has progressed, so do you adjust that? 218 now is the area that I like for the buy. Let's just go ahead. And then I want to pull up, I'm sorry, 4 hours, seeing some confluence there. Actually, not an hourly. So yeah, after today's close, it's progressed quite a bit. It was down at 202, right in line with the beach. So now I would be looking at that kind of whole area as being an area I'd want some orders from 202 to 218. So while I am at it, make sure that it's updated. Stop that I am interested in, I would be definitely looking on that low holding, 186. Let's see what emasar says. emasar says 173, so I definitely would not want my stop to be above that. So 173, yep, I got the stop right. Just need to cut the order in half at 203. Add one at 18. Definitely ship that. Okay. Quick look at ETH as well. ETH isn't playing around. Good. Get this high. I need this. I would very much like this high to be taken out, as I've established a significant position and it's kind of been lollygagging, which is not a good sign. As we see, like we're looking at the daily. Let's just look at the last 1, 2, 3, 4, 5, 6 days on ETH compared to, Litecoin. That's a lot different, and that's when you start to worry a little bit, but it's looking good. Loving this action here. So buy zone is 1792 to 1823. Oh yeah, I'm actually done buying that because I've already got such a significant position, and I am going to be selling this a little bit. Take a little over 10% off the table, we'll call it 15. I'm just going to take it right at the current price because we are above resistance. We are above this high. That's where I like to sell. We might even be by weekly resistance too, like that. And I sure hope that it keeps going. Okay, have to adjust the stop. So I've got the funds available to sell. Put all the funds in the stop loss, and then once it's ready to take some profit, just move a little bit of the, I take that, decrease the position size of the stop so that the funds are now available to take profit on. 1896.55. Give it to me. I'll take that all day. All righty. Action there, and one last look at the chat. Just got filled. Time to call it a day. I'm getting hungry. Anybody have any ideas for dinner? I'm thinking pizza. I made some biscuits and gravy this morning, and they look goddamn delicious. ETH 2021 target, I really haven't done much analysis there. If you want a very lazy target, it's 3,000, expecting it to double our all-time highs. Very lazy target. Okie dokie, thank you all for the kind words. Yeah, thanks for clarifying Fireblade. I did mention maybe 25% of the orders I set get filled, and that's just a rough estimate. I would say about 20-25%. Majority of orders I set, I just expect them not to get filled. And I think of it a lot like playing poker in terms of 80% of the hands in poker I fold pre-flop. You just have to sit there and wait and get a hand, garbage, fold it, garbage, fold it, garbage, fold it. Ooh, finally get a good hand. Bad flop, gotta fold it. So that's a large part of what playing poker will come down to is just A, you have to be there and you have to be present to get the cards, and then B, you have to be just very, very diligent and patient. So much more so than your competition, that you're able to develop some sort of edge from just getting in these more favorable situations based on risk reward and strike rate, and that it's going to be a lot of work, and that's one of the hardest things to do, to get used to. I think if you're used to just market entering all the time, start by just using a limit order. We've all been there where we just so frequently just buy exact tops and sell exact bottoms at market because we're so positive it's going to keep going. And I remember one of the first things that I did that really helped me was instead of using a market order, I would use like a stop limit order. So I'll just go over that really quickly because I think it is something that can really help if you struggle with FOMO and that type of stuff. Say that right here, you just really want to buy Ethereum because it's breaking out above all-time highs, and it's just really, you don't even feel like you can set a limit order because you're just so convinced that we're, 1895 just ain't going to happen. We're just going straight up from here, and you won't even get filled on limit order. If that's how you feel, I found one of the things that really helped me was instead of buying at market here, entering a stop limit right above the price, like above the highest high. So you could market order right now, or actually you could do like a stop market. So what it would be, instead of a stop loss that gets you out of a position if it goes against, this could be a stop market entry to get you to buy if the market breaks out and goes in your favor. So that instead of market buying right here at 1893, 1894, you need to see it continue just a little bit more to say 1915. So you set a stop market right there. And then as soon as price gets there, you're going to have that triggered. And what I noticed, was I think a very, very common theme that anybody that I've talked to before it clicks for them with trading is that they just consistently are wrong and exactly wrong. Like just consistently buying stuff like this and selling stuff like this. And that's where it, starts to seem like it's goddamn impossible. And what I noticed when I just quit market entering, and I set a stop market slightly above, in the continuation direction, I noticed that a lot of times I just didn't get filled, like on that time where I was just FOMO at the mouth, ready to market buy, and had, bought enough of these exact tops to where it's like, okay, I've done this enough. And now it's like, just show me a little bit. Just show me that this isn't the exact stinking top before I market buy it. And so I think that could be, a good way to start to gain some control, because what you're going to see is that after you set that order and then you sit back and you just like everything changes. You're in that mind state of I got to market buy right now. And then you set this order and it's like, okay, all the price has to do is go up a little bit and I'm going to be market buying. And now you're going to sit back there and just kind of be out of that mind state. So just knowing that you're there to get your market entry. And after doing that enough, I started really realizing that I can get filled on limit orders like any time that I want if I set it close enough to the price. And then that next extension from there was, okay, well, what if I wanted to set orders that almost never got filled? Is that, maybe going to be a good approach to where if I set a limit buy here at 1895, I would expect it to get filled every single time. So I would myself do that instead of market buying. Whereas if I am going to be, just able to look for, some sort of confirmation. So instead of just market buying like right here and right now, waiting for it to go a little bit higher with that stop limit, and then getting some experience with that, maybe you will come to a similar conclusion as me. Is like, maybe I want to be setting orders that almost never get filled. And if I can do that, like say right now, like you could set an order at $600 to buy Ethereum, and like that's probably not going to get filled, right? So you've got to have some sort of balance of like, where can I set an order that is going to, not get filled a lot of the time, but when it does, it's at a really, really good spot. I guess that's kind of my thought process there, as I, definitely started out as a market order. Like I definitely realized there's seems to be two types of people: those that use market orders and those that use limit orders. And I really, wonder how many of those that use market orders are profitable in the long run, just because there's a certain mind state that you're in when you just feel like you have to use a market order. Okay. I think that will probably just about do it here. See what else we got. Rice and salt for dinner. That sounds like a pretty darn miserable existence. Salt, definitely. Oh, and I forgot. Did anybody guess what Coors Light was originally called, Silver Bullet. That's a good guess. I think that was in an original advertisement. That was definitely a big part of their slogan. I don't see anybody's got it. So original name for Coors Light is Colorado Kool-Aid. Now tell me how cool that is. And all that they need to do is do like a throwback can, like a classic can where it says Colorado Kool-Aid. Are you kidding me? The sales go through the roof. What are they thinking? And the coolest part about it is the guy who started the Coors Light offshoot of Coors Banquet. He was some mountain man who was famous for, back in the day, a lot of what people's hustles was like bar bets, right? Like you'd go into a bar and say, who's the toughest guy? I'll bet $100 I can beat him up, right? So that was, a big part of the, mountain man cowboy culture. This guy, I don't know his name off the top of my head, but he would go in and challenge people to shotgunning a beer to see who could do it the quickest. And he still, to this date, as far as I know, got the record for the quickest shotgun of a beer. It's like 2 seconds or something like this. And this was the guy that started the Colorado Kool-Aid brand. So, I mean, Coors Light, you need to get at me because I can, figure out some sort of mountain man shotgunning a can of Coors Light, put that on there and rebrand it. You're just going to sell. Are you worried about selling out everywhere? Is that the only thing you're worried about? All right. So it is definitely time for me to move on with my day and get to some dinner. I definitely enjoy hanging out with you guys and appreciate everybody for tuning in. Okie dokie. Glad to hear, Storm UK, that I made you feel better about yourself for you're not the only one market buying the top and selling the bottom. Thanks for, saying that, because I am fully convinced that it is every single person out there, and that just nobody's ready to admit it. I mean, that has what is so amazing about the market is how it will just get you to these threshold points in your brain to where you just physically can't take it anymore. And that's where most people just give up. Nobody's going to admit how often they have bought tops and sold bottoms, just because nobody else is admitting it. So they feel like they're the only ones, and that they have to be the most incompetent person ever to consistently be so bad. And I am convinced that is part of the learning process of if you're really going to get into speculating and trading. And that's why most people are so convinced that none of the technical analysis or actively speculating works, because they tried, they found themselves in that, dark hole of failing so miserably that it was basically exactly wrong. And then they gave up, and that's, I really think, a big kind of, if you get to that point where you are, fairly consistently buying and selling at the exact wrong time, I really think you're at a point where you can turn a corner. Because if you're if you can just really figure out what is compelling you to make these decisions, then you can start to see why, maybe start to understand a little bit deeper level of why the markets move to where they do in such specific ratios to challenge the thresholds of our liminal space, as FOMO will say, to challenge the leverage of the market, to see, how leveraged is this market and how much will stop losses cascade if, we reach a certain price. These are the things that I think will start to make a little bit more sense if you're able to. First, you got to admit it to yourself. And that's the other thing that why I appreciate you saying that is that where most people fall short is just being flat out delusional. Like, it's very hard to admit to yourself when you're not doing good at something that you want to do good at. Your mental biases and all this stuff, it'll just be like the way your coping mechanisms, it'll just be so much easier to cope with delusion than to actually face the facts. And this is why I talk so much about record keeping and the risk management. Risk management comes down to record keeping. You got to know how you're doing, and you've got to be able to, start to understand how you are doing in real time versus how you think that it's going to go. And you've got to try your damnedest not to be delusional about the results that you are seeing, because the bottom line is that trading is so much easier said than done. And if there are, signals that occur that can make somebody money, and you're finding yourself having trouble executing them, then that's something psychologically. It might be a self-destruction. It might be, you know, a lack of discipline. There's anything down these lines. And that's why I'm so enthusiastic about this myself, is because there's nothing that has challenged me more to become a better person in my life and to evolve my, you know, psychology, my coping mechanisms. Let's see if I can end with a good classic book. I switched around everything. So here's a classic. I studied psychology before dropping out in college, and just really always enjoyed that sort of stuff, and then really paid attention to how that affected me in poker and whatnot. And this was a big commitment. I mean, a big read. Let's see here, 500 pages, but I think it is really top notch. This was the type of thing that after I dropped out of college and studying psychology, I was, you know, I'm just going to get a library card and just read these things for myself. And that worked for me, at least for me personally, was to just, you know, really dive into books like this, managing your mind, the mental fitness guide. You know, who doesn't want to get more mentally fit? Everybody's talking about getting more physically fit. And if we can get more mentally fit, then everything else comes into line. So I would definitely recommend that, by Jillian Butler and Tony Hope. Just read through some of their right here on the cover. Build self-confidence and self-esteem, manage your time, overcome anxiety and depression, deal better with your anger, take control of your present and future, free yourself of persistent fears and worries, come to terms with loss and trauma. So a lot of good topics in there. Something that's been many years since I've dug into that, but these are the things that I think if you really, really want to get better at trading, and you've been around for a while, you know how all the indicators work, you know what an RSI is, you know what a TD is, you understand all these things, but it's just not clicking for you. Try to look inside, try to be introspective about where can you evolve yourself in your whole life as well as in your trading. So I think that will be a good place to end this stream, and thank you all for tuning in. Today is Wednesday, so tomorrow will be the Honest Analyst live stream at the normal time, 7:30 p.m. Eastern Standard Time. So be sure to tune into that, and I will look forward to catching up with you guys. Oh, excuse me. Look forward to catching up with you guys then.